When Canadians think about financial stocks, they often think about big banks, but some other financials are definitely worth watching. Insurance stocks. Coming up, we'll explain why and some of the ways to invest. So let's dive in to this week's market moves. Okay, if you've been watching the markets, you've probably noticed Canadian bank stocks have been solid performers. One big reason? Big profits. Canadian banks have been delivering solid earnings for investors. That has helped the sector stocks rally in the past year, even more so than the so-called Magnificent Seven in tech. But beyond the banks, Canadian insurers have also been notable performers. Take a name like Manulife. Over the past decade, its shares have actually outperformed several of Canada's biggest banks, while other big insurers have enjoyed their own strong runs. So if you're an investor thinking about long-term returns in financials, insurers have delivered strong historical returns. The same is true on income generation. For example, Canadians love their bank stocks for the dividend income. Well, based on data, as of the end of July 2026, both Sun Life and Manulife had dividend yields above 3%. That's higher than the yield from a number of big banks at the same time. So the income story stacks up too. Now, just like the banks, insurers have generally reported relatively stable earnings over time, but it's also worth knowing how global the Canadian players can be. In 2025, for example, Manulife generated more revenue in Asia than it did in Canada, and Sun Life, more of its revenue came from the US than from Canada. So you're not just getting exposure to the Canadian economy, this provides exposure to businesses operating in markets such as Asia and the United States, where long-term savings and wealth management trends may differ from those in Canada, which can be different than some of the Canadian banks. So how do investors get exposure to this whole group in one trade? Like all equity investments, insurance stocks can fluctuate in value and may be affected by interest rates, equity markets, regulatory changes, and company-specific risks. Of course, this is not financial advice, and past performance doesn't guarantee future returns, but one way to gain exposure is the Global X Equal Weight Canadian Insurance Index ETF, ticker SAFE. It gives you access to several major Canadian players across the insurance landscape: Manulife, Sun Life, Great-West, and Intact. With SAFE, you get exposure to the whole story in one ticker. For more on Canadian financial opportunities, check out the insights section of globalx.ca. That's it for Market Moves. What market moves are you watching? Let us know in the comments and make sure to subscribe so you don't miss our next investing video. See you next time.